Gold is one of the most traded commodities in the entire forex market. Most people, when they just start trading, they're unsure of whether they are to trade or not to trade gold. And I get the uncertainty. After all, gold is pretty volatile. And some may argue that as a beginner, you have no business trading gold because you would blow your account. But what if I told you you don't have to blow your account? In this video, I'm going to show you when to trade gold, why you should trade it, and the exact supply and demand approach that I use to find my entries. By the end, you'll have a clear framework that'll set you apart from other beginners. Welcome to Mark for Success, where I help beginners who are determined to become profitable day traders. Now, of course, if you clicked on this video, you already know what XAUUSD is. So I'm not going to explain all that. Just remember that XAU is the symbol for gold and USD is the US dollar. You're probably asking, why should I trade gold as a beginner? Well, if you ask me, gold is one of the cleanest pairs that you can actually find with a trackable structure and it respects key levels. Now, as a beginner, this is exactly what you want. Clear structure, a visible trend, not noise. Now, if we look at the monthly chart for gold, what do you see? Are we in an uptrend or a downtrend? It's pretty straightforward, right? We are in an uptrend as this is a bullish instrument. Now, if we look at another popular pair, which is Euro USD, you will see something different. This is a monthly chart for Euro USD. Does anyone know what's happening here? Well, I think we could agree that the trend is not as clear as we'd like it to be, right? But with gold, even a 5-year-old can figure out the trend. And if that's not convincing enough, listen, gold moves, and movement is opportunity. Yeah, gold has the potential to make you a lot of money. Which brings us to the next question. When is the best time to catch those opportunities, those movements? Okay, literally almost every beginner content out there overlooks sessions. And it is a key component that will decide your fate in this market. So, I'm going to tell you right now. We have three main sessions, starting with the Asian session. And this is where there is typically low volume, which means this is not a good time to trade gold. Then we have the London session. And at this point, gold is waking up with a lot of institutional volume. This is a great session to trade, and most advanced traders use this slot as their primary session. For me, I like to interchange between London and New York. It really just depends on what price is doing in either sessions. If I get a good supply and demand setup in the London session, I'm taking it. And third, we have the New York session. This session, it is usually pretty volatile. So you want to be aware if there are any news events and make note of it. Apart from that, like I said, volatility is movement and movement equals opportunity. So don't be afraid of movement. And I almost never recommend using indicators, but to make things a little easier for you, and so you know the start and ending of each session, you can always use a sessions indicator, which will give you the perfect layout. You just have to open Trade and View, click on the Indicators tab, and search for the session indicator of your choice. Easy, right? Yeah. So now that we have that out the way, what should you look for in order to place a trade during your session? Okay, I'll tell you. The concept is pretty simple. No need for 50 indicators or 10 confluences before you take a trade. The idea is 1. Find the trend. 2. Look for a break of structure. 3. Mark your zone and wait for the pullback, ensuring that your zone does not get invalidated. And 4. When price comes back to your zone and the zone holds, you take your entry. Now, this can be aggressive, conservative, or break of the candle. Personally, I like break of the candle entries. Now, Most people will say put your stop below the zone, and you can. But I use current candle stop, but that's just me. Here on the chart, you will notice that we are in an uptrend, and the level was broken. But you can see price broke above the small consolidation there on the left. This means the red candle before the break is my area of interest, aka my demand zone. I mark the zone and I'm looking for the pullback. I'm waiting for the pullback. And as you can see, we are on the 5 minutes time frame and I'm patiently waiting for price to pull back to my zone. Eventually, price came back and invalidated my zone by breaking through. But there is also a 15-minute zone on the 15-minute chart. So I went to the 15 minutes chart to mark that zone. After doing that, I went back to the 5 minutes chart and I am waiting for the green candle to close to take my entry. Now, once the green candle is closed and the next candle broke the high of the green candle, that's where I got my entry. And as you can see, the trade it TP for a whopping $5+. And the trade kept running, by the way. Now, it is important that you understand that I'm not here to sell you a dream. I'm not going to fake profits and show you a 100K win when I don't even have that kind of money in my bank account. And to be honest, most people don't. But I'm showing you what's possible, be it $5 or 50. One day you will get to 500. You will get to that 500 win, that 5,000 win, that 50K win. Just make sure that you have proper risk management because that is what is going to keep you in the game long run. Now, if this video gave you clarity, hit the subscribe button. Every week on this channel, I will be breaking down strategies, market analysis, and mindset shifts that moves the needle for beginner traders. And you're already here, and there's plenty of room, so you might as well stay. Drop a comment down below and let me know if you're already trading gold and if you're looking into it. I read every comment. See you in the next video.